You're watching Business Nigeria. The Nigerian stock market opened the week on a bullish note on Monday, with investors gaining 745 billion naira as market capitalization hits 104.5 trillion naira. The rally was driven by sustained demand for stocks such as eTransact, Red Star Express, among other 45 advances. Market capitalization, which opened at more than 103 trillion naira, rose by 0.58% to close at more than 104 trillion. The all-share index gained 946.61 points, closing above 163,000, compared with more than 162,000 recorded at the previous session's close. To help us understand this positive performance of the market and projections for 2026 is the MD and CBO at Plotus Neo by Afri Invest, Dr. Ayodiji Ebo. Thank you so much for joining us at this time.
Yeah, thank you for having me. Good afternoon.
Good afternoon. The Nigerian stock market opened the week with a significant gain of about 745 billion naira in market capitalization. What key factors do you believe primarily drove this bullish opening?
Okay, thank you very much. I think, firstly, if we cast our mind back, we recall that between the last quarter of last year, we saw significant sell-off, especially before the clarification of the capital gain tax. As a result, a lot of investors sold off their portfolio. Then, despite the clarification, we still saw a bit of sell-off, but wasn't as intensified as we saw before the clarification. So the positioning was that people were going to come in January to buy in again on some of those positions, such that when they are calculating their gains for the year, will be based on their purchase price relative to the profits that they have made or the sale price that made. So, but beyond that, we also note that when you look at fundamentally the economy, we're also seeing stability. Look at it from the FX management, look at it from the growth rate, look at inflation also coming down. Toward the end of last year and a bit of early this year, we saw even interest rates decline before we saw that uptick in interest rates. So these are some of the factors that have contributed to the positive signs that we're seeing, or positive gains that we have experienced in the market. But you also observe that a lot of the stocks that have gained significantly are stocks with lower outstanding shares. Yes, the pharmaceutical industry, the insurance space, the pharmaceutical space, which people are we are expecting that there will be a lot of support from also the government, a lot of tax exemptions that they will also enjoy within that space. And some of them are also looking at backward integration to be able to, instead of importing, also see how they can locally get some of the raw materials for production. So we're seeing a lot of interest. You see Mian Baker, Nikio, NIMET, yeah, a lot of them have gained. The insurance space, the recapitalization is also a major boost that for those that are able to survive that recapitalization, they will also be able to also do well. But by and large, you look at it, it's been broad-based. And we feel that we're seeing renewed interest, especially domestic investors are now beginning to see that the stock market is also a way they can also build wealth. So that awareness is increasing, and investors are also becoming more savvy by also going for what delivers value. While we are seeing a lot of value traps, what we call value traps are stocks that don't have strong fundamentals, but investors are seeing that rally and just trying to speculate and take advantage of it. And at the end of the day, they may also get trapped, because once there's no fundamentals, once the storm is over, we'll see those that are actually dancing naked.
All right, so to what extent was this rally driven by fundamentals versus short-term market sentiment and positioning?
Okay, thanks. Why I would say it's driven by fundamentals is that don't also forget that we're expecting full year results. So we've seen a lot of these companies, investors have also looked at their 9 months results, and they've seen how they have improved quarter on quarter with the expectation that the full year will also be very impressive. And it's also the period where we expect most companies to declare final dividend. So when you analyze out of like maybe 10 years, there's also a trend that January, February is always bullish. We call it the January effect. Sometimes it starts from December, that you will see 6 out of 10 that people will buy position ahead of dividend. So I would say it's fundamentally driven. Yes, while you may have some people, the bandwagon effect that some are just now speculating after we've seen a major rally. But I think that when you look at it across sectors, is it from the banking sector, the telecommunication sector, we saw what MTN did today, almost trading above 600 naira, with close to about 10 billion in the trades done in that. So we think that these companies will also deliver value. So once investors stay with companies, you buy the business. So once you understand the business that they are doing, economy is also improving. You know, one of the major distortion we've had is the exchange rates, and that stability has also helped businesses to project, when you look at the consumer wallets, it's also improving over time, given a lot of the pressures that the shrinking of the consumer wallet that we have experienced. So overall, I can say that it's fundamentally driven and that this can be sustained. That doesn't mean, that for the stock market, you would see mild, we'll call it pullback, consolidation before you see another major lift. All those cycles, we can't also rule them out, but barring any unforeseen major policies that may impact the market.
All right, so we also observed broad-based gains with over 45 advances. Does this suggest a healthy market breadth, or are gains still concentrated in selected stocks?
No, I think you rightly said it. It's broadly based, and this is across sectors. So we're seeing that rally cut across the banking, the insurance, the telecommunication, pharmaceutical, the FMCG, that's the fast-moving consumer goods. So it's across the sector. So investors are expecting that with this stability that we're expecting this year, expecting that the economy should also do better. If you look at the business confidence reports, most of the business owners or executives are also expecting that businesses will do well based on their projection in the next 6 months, 3 months. You see those projections, the BCI index is higher. So all these investors are buying ahead. If you expect that the demand would improve, you position now. You expect the recapitalization within the banking space last year will also yield results, with interest rates expected to remain high, even the deficit in the budget. That's also going to be positive for the banks. Insurance, I spoke about that earlier, pharmaceutical opportunities within that space. The agri space too, we're also seeing opportunities. So by and large, overall, investors are positioning ahead, given the stability. This is based on, when you look at the projections, if there's no major distortion against our exchange rates, all this we think that would continue to move up.
All right, so how much of the current market optimism is linked to expectations around macroeconomic stability, including inflation trends, interest rates, and, of course, fiscal reforms?
Okay, thanks. So when we talk about some of the policies, so you would look at the agri space, for instance. Government is really keen to see how across those value chains they can support how we can be self-sufficient. And most of the quoted companies quoted companies on the exchange press co, You look at Okomu, likes of FTN, Kukwan, and the likes. Those companies would also benefit from companies trying to look inwards to purchase items rather than importing them. You look at the stability, the exchange rate. We've not factored in even the foreign portfolio investors that once based on their interest, based on the stability of the exchange rate. So that is also a major factor that's helping. Inflation, yes, while we know that we've had to ignore the December numbers because of the statistical impact.
Okay.
But with inflation rates also coming lower, we expect that over time interest rates will go lower and investors will be looking for alternative investment that will deliver higher return. So the search for the higher returns is also what we are also seeing in the market. Investors are becoming more savvy, becoming more knowledgeable about the market, seeing it as an investment alternative rather than just fixed income. So when you put all this together, it's driving the interest that we're seeing in the stock market.
All right, so in your own view, how sensitive is the equity market at this point to upcoming macroeconomic data and policy decisions?
Okay, thanks. I think it's highly sensitive because it can't operate on its own. If interest rates increase beyond projection, so currently the borrowing rate increase beyond projection, it means that finance costs for all these companies will be impacted and profitability will be impacted. That would have major impact. FX also, if there's a major distortion in the FX market, it means we will see sell-off from some foreign investors. Then we begin to see for some that always have FX exposure, it means that they will have to book some losses, unexpected losses. So that would have impact. Then we begin to see investors checking their books and selling in companies that may have exposure to FX. So I think by and large, you can't dissociate the market from whatever happens in the micro, even in the global economy. Though, because we have more domestic participation, at least average about 70% based on the last data, driving activities in the market, we may not see as much impact if we see a major global impact compared to if it's domestic impact that we'll see.
So looking ahead to 2026 now, what's your broad outlook for the Nigerian equity markets?
So I think that there's still a lot of opportunity for upside, given the business activities that we're expecting. So starting with the banking sector, interest rates, if it remains high, with the capital that has been raised, even if they don't deploy most of them for lending, that high interest rate will generate interest income for the banks. Also, when economy is stable, and if we're able to work around the credit system, it means there will be more opportunity for lending. That will also increase and impact positively on the banks. I spoke about the pharmaceutical space. There's also opportunities there because of tax exemption, government trying to also provide support to that sector. And the insurance sector too, this year is also the deadline for their recapitalization. That is also going to be a major boost because they have more capital to going into more businesses, which is also generate more income. Telecommunications is also there. Data is live. We're seeing how they're able to accrue significant revenue from data and also some of their fintech businesses. So we think that there's still opportunity. Investors should just focus on long term. This doesn't rule out volatility. This is stock market. So you would see market react to some news. But if you believe in a company, like I will always say, if you are happy to buy a company at a higher price, when it goes down, you should be able to accumulate more if you actually believe in that business that you are buying into. So That's once investors understand how to also play this market, then we think that the upside is still very significant as we progress this year.
Okay, so which macroeconomic conditions must fall into place for the market to sustain growth in 2026?
I would say I'll speak on two: exchange rates and secondly, interest rates.
Okay.
If we don't want to see any major distortion in interest rates, that will impact on finance costs, and the exchange rates would also impact on exchange rates provisions.
All right, CBO of Plotus New by Afro Invest, Dr. Ayodeji Ebo. Thank you so much for talking to us. Thank you.
Always my pleasure. Thank you for having me.
All right. So it's now time to review trading.